So the unit is called audit and assurance. So there are two things that you need to understand here. The first one is to audit and to assure. To assure is basically to raise the level of confidence. If somebody tells you that I assure you, he's trying to make you believe in him, he's raising the level of confidence. And then to audit is basically to examine or inspect something. Now, almost everybody is an auditor. I hope that you know that. Whenever you're going to buy anything in the market, one of the things that you look at are the prices, you look at the quality, you look at the functionality, such kind of things, and durability, such kind of things. Even a phone, when you're buying the phone like this one of mine, you always ask yourself, what is the capacity? You want to know the speed of this phone, right? And such like things. So therefore, it means that both of us are auditors. Both of us are auditors. So the question is, how do we ensure that we understand what we are doing and apply it in real life? How do we apply what we're doing in real life? Now, auditors have a responsibility to inspect and then give assurance or confirmation to the users of the financial statements. Now, let's look at the syllabus of this particular unit. Let's look at the syllabus of this particular unit. The first area that we need to look at, syllabus topics. The topic, number one, we look at nature and purpose of an audit. Nature and purpose of an audit. That is topic number one, under AA. Number two, we look at assurance and non-assurance engagement.
انت نقلك صوت فتنة.
Assurance and non-assurance engagement. Topic number three is legal and professional framework. I hope that you're writing them down.
إلا الفقح معبد سينا كورا شحمو يديني عليها فرتونا قاعد
Legal and
أنا معي
professional
تغلوت
framework.
وعب
Sorry for that, somebody is making noise.
أبا نيفا.
Topic number four is called planning and risk assessment. Topic number five is called audit risk assessment. Topic number six is called audit planning. Topic number seven is called audit documentation. Then we have topic number eight, internal control system. Topic number nine is called internal audit function. internal audit function. Topic number 10 is called overview of forensic accounting. Overview of forensic accounting. Topic number 11 is errors, frauds, and irregularities. Errors, frauds, and irregularities. Errors, frauds, and irregularities. That is topic number 11. Topic number 11. Topic number 12. For those who are joining, my name is CPA Dennis. I'm teaching audit. This one is an intermediate unit called audit and assurance. These are the topics that needs to be covered according to the current syllabus. Topic number 12 is audit evidence. Topic number 13 is auditing in public sector. Number 14 is audit report. Fourteen is called audit report. And then we have number 15, auditing in a computerized environment. Auditing in a computerized environment. That is number 15. Auditing in a computerized environment. Then the last one is called emerging trends. Emerging trends. So kindly copy this and let me know. These are the main topics. Number 16 is emerging trends. So under emerging trends, we are looking at things like the Data Protection Act. We are looking at the impact of online auditing, or we are looking at things like information securities, right? Such kind of things. When there is data leakage, how do you ensure that you protect your data? We shall be looking at that at the last part. So these are the major topics that you need to cover. Kindly let me know that you've taken them down, all of them. Are we done? So thank you so much. Somebody has said that we are done. Now, I want to make it understandable for you, or make it easier for you. Are we all done? Mohammed, Jonas, and Sarah. Have we all copied that? It is important that you have this in your book so that when you will be revising, you know areas that you have not looked at. You know the topic that has not been covered. I normally start by giving you the areas that needs to be covered. And I always start by showing you the areas that the teacher needs to cover before the semester starts. So I'm hoping that all of us are done. Now, this particular unit is very simple to pass. The exam comes from areas that are predictable, right? Exams always come from areas that are predictable. So we need to look at the audit process. When you look at the stages of audit, you can be able to know where is the examiner setting questions from. Sometimes students normally tell me, some students tell me that, Mr. Dennis, I don't even know how this paper is being set. As in, the questions are confusing. And I tell them that if you understand it from the beginning in my class, you will read the question, then you automatically know where the examiner is coming from. You'll automatically know what the examiner is setting, right? So it is very important that you understand that from the beginning. So let's look at the stages in audit. The stages in audit. So the first stage in audit is called acceptance of engagement. That is the first stage. Just like any other assignment or any other job, people apply. So in audit, we normally send proposal. Once you have sent proposal or you have seen some advertisement on the newspapers, you can apply. Once you have applied, the process of evaluation will be done, a selection process will go through, and then you can be appointed. So when you are appointed, that is when your work starts as an auditor. You start by accepting the engagement. So you'll first accept that you have been appointed, and you agree by giving a letter called letter of engagement. And by the way, I am an auditor by profession, so I'll be giving you more of practical experience so that when you are done with this unit, you are a good auditor. You can actually go and start working, right? Because I am auditor by profession, that is the job I do. So when I'm teaching you this, I'll be giving you the practical experience that can equip you well. When you leave this college, you can actually go and start working immediately. Now, I'm saying that the first thing, you'll do your application or tendering process. Evaluation will be done by the client, the one who is looking for an auditor. After that, when you're appointed, they will give you an appointment letter, and that is where you start from. So after getting the appointment letter, you will acknowledge it or accept it by giving something called letter of engagement. You will sign or prepare letter of engagement. This letter needs to be signed by the client. It needs to be signed by the client as a show of acceptance. It actually has, this letter has terms and conditions of engagement. So which are some of these terms and conditions of engagement? The purpose of audit. Which kind of audit you're doing? The scope covered. These are the contents of letter of engagement. An examiner normally said this. They will ask you what are the importance or content of letter of engagement, or at what time can we issue letter of engagement. I'm saying that letter of engagement is an acceptance. It is the evidence that you've agreed to take the job. So when they have given you appointment letter, you reply by giving letter of engagement. And on that letter of engagement, it has some terms and conditions that both of you need to agree on. You are going to sign it as an auditor, and the client will also sign it. Some of the things that will be contained is the purpose of audit. What are you going to do? For example, I could be auditing financial statement to check, or maybe I'm doing audit for statutory purposes because it is end of year. I could be doing the system audit. It could be compliance audit. It could be governance audit. So you need to know the purpose of audit. So you can say that the purpose and nature of audit or type of audit, the scope of engagement. We also need to know responsibilities of each party. Which is the auditor and the management. So auditor is the person who executes the assignment. The person who is going to perform the assignment is the auditor. Then management is the person that is employing you. Is the person who is charged with the responsibility to keep the subject matter, all right? The management are the owners of the company. And when you talk about management, we include directors inside there. So they are the people that we're going to check their books or audit them. Therefore, we have to agree from the beginning, before we start the audit, what is your responsibility as management and what will be my responsibility as the auditor? After that, the next number, which is number 4, we have to agree on confidentiality clause. We have to agree that the information that we are getting as auditors, whatever we find in your company will remain in your company. Therefore, we call it confidentiality clause. Confidentiality clause is a clause that we are trying to guarantee. This is where we are trying to guarantee the client that we shall not leak any information that we meet or receive during the course of our duty. Then we also need to talk about the audit fee, audit or engagement fee. We have to agree on the fee to be charged. We have to also agree on nature of reports that are expected, nature and timing of report, nature and timing of report. We have to agree on those ones in advance. And then there is a clause where both of us acknowledge that we agree with the terms and conditions. So it is acknowledgement clause. Right? Of course, we have to also include the title of the subject matter or the client's address, address of the client. Number 8, address of the client. Address of the client. So those are things that we have to indicate in our engagement letter. We shall look at the importance of engagement letter. We shall also look at the responsibility of each person in our next, as we proceed, right? As we proceed, we shall look at those areas. Those are areas that are always examinable. They will ask you the roles of auditor or responsibility of auditor when you're auditing financial statement. They will also ask you for the responsibility of the management. And so we shall look at that. Now, today I hope that you understand the term engagement letter. You know what it means. It is a letter written by the auditor to the management. Engagement letter is a letter written by the auditor to the management, highlighting the areas and the scope of engagement. It also indicates the scope of engagement, right? And the terms and conditions of engagement. One of the advantages that we can see is that this letter tells us the engagement fee. So it helps us to clarify how much are we working for. It also helps to define the scope of engagement. Those are importance. It also helps us to reduce some of the misunderstanding between the management and the auditor, so that in case at some point we are going to disagree, we prevail. The engagement letter we avail the engagement letter and say that these are what we agreed on. These are the things that we agreed on. It also helps us to understand each party's responsibility. That is a beautiful thing because already it can come in exam. Already it is an examiner area, examination area. Number two, after agreeing on the terms and conditions, of course, you are going to agree with the client on when are you ready for audit. So the client needs to prepare their books and call you for audit. When they have called you for audit, you come to number two, which is called planning. Under planning, there are things that you need to check. Under planning, there are things that you need to check. So let's look at the things that you need to check under planning. Activities under planning. Activities. The first thing you need to look at have a good understanding of the client's activities or the client's business. Understanding of the client's business. That is number one. So that you know the nature of business of the client. Number two, you need to have experience. So we are saying that you need to look at the staff. The staff, so we talk about capacity and competency. Of the audit team. Remember, I said that audit is about inspection of financial statements or inspection of books of account. So whoever is going to audit, we need to check ourselves, look at ourselves. Do we have the right skills? The skills. Do we have the right number of staff? That is the capacity. Like, for example, the assignment, maybe the assignment requires you to employ like 20 staffs or 10 staffs or 3 staffs. Do you have them? It needs somebody who has experience maybe in technology, somebody who has experience in banking, somebody who has experience in manufacturing. Do you have the right staffs? So that is something that we need to look at that. Number 3, we also need to look at our budget, where we look at the available resources. During planning, maybe the client is residing in Mombasa and we have to go to Mombasa. So we need to ask ourselves, do we have the right resources in terms of money, in terms of systems, in terms of maybe machines like laptop? So the resources need to be considered there, both money and materialistic resources. We need to look at that. Maybe number 4, we need to look at the timing. You need to ask yourself, when does the client require a report? So report timing or timing on reports. When do they expect you to deliver the report? We have to think about that. When do they expect you to give the report? We also need to perform risk assessment. You need to understand, this kind of client, we have understood the nature of business. Is the client very risky or is not? So you need to understand or perform what is called risk assessment. Now, these are some of the activities that you need to undertake during planning so that you can be able now to go for the assignment. Of course, you also need to come up with a good strategy that ensures quality control activities are done. What do we mean? At the end of the day, you need to give an audit report. That audit report needs to be accurate. You don't give an audit report that has got some errors. So that means that you need to come up with a quality control plans. And that's something that you need to do at the time of planning. Quality control procedures. So we say set quality control procedures. Set quality control procedures, that is the last part. Set quality control procedures. Quality control procedures. Now, after this, we go to the next stage. We are looking at stages in audits. So you go to the next stage where you are going to the client site. So we talk about evidence and execution. Execution stage. execution and evidence collection. Execution and evidence collection. This is now where you are performing the audit procedures. Apply audit procedures to execute the assignment. Now, when we talk about audit procedures are the activities that you are undertaking to be able to collect the evidence. It is the actual activity. Hiyo ndio kazi unafanya collect evidence for audit. It is an actual audit process. So you apply audit procedures to execute the assignment. So which are the audit procedures? The procedures that you're going to undertake when you're doing execution. We have procedures. So look at audit procedures. We have R, A, E, O, U. Right? Those are the audit procedures. So we have analytics or analysis. We have inquiry. We have inspection. We have observation. We have recalculation. Recalculation. Now, audit procedures falls under this. Those are the audit procedures. Wakati unaenda kufanya audit, hizi ndio vitu utakuwa unafanya ndio uweze kujua whether the financial statements are okay or not, whether there is a problem or not. And those things that you're going to do are what we call audit procedures. They are the ones that will help you to have the right audit evidence and come up with a correct report. So when you're going to audit, you look at the financial statement and you analyze it. One of the ways you can do analysis is you can be able to compare the expenditures, actual expenditures, and the budget expenditures. What was budgeted and what you are actually seeing. You compare the two. That is analysis. You can also be comparing last year's performance and this year's performance. When you see big variances, you start now checking or inspecting why are there big variances. For example, if last year we had a revenue collection, we collected 20 million revenue last year, but this year we are collecting only 10 million. As an auditor, you need to be skeptical. Skeptical ni kwamba unakaa chonjo, unajiuliza kwa nini reduce to that extent within a period of 1 year. What has made it to reduce? How did you know that there is a problem? You performed an audit procedure that is called analysis. You analyze the financial performance for last year and this year, and you're able to see some variances. Now, when you realize that there are variances, you become skeptical. Skeptical means having a doubting mind. You start doubting that these things could be wrong. Either they posted wrongly or there was cooking. They tried to cook the financial statement of one of the years. You have started doubting that there could be something. And so you need to apply additional audit procedures. The first audit procedure that you have applied is this one, but then you have to apply additional. That could be inquiry. So you go and inquire. After analyzing, you are able to see something. You now go and inquire by asking questions. You ask management what could have gone wrong. What is causing the differences? Why the big variances? So therefore, they will try to explain to you. They will give you evidence to show why there are differences. When they give you evidence, you apply additional audit procedure, and that is inspection. You inspect the evidence to check whether they are true. What am I saying? When you are doing actual audit, one procedure can lead you to another. You can apply one procedure and then it makes you or prompts you to apply the additional procedure so that you can get more evidence. At the end of the day, an auditor should only give a report when he's very sure and confident of what he's giving. If you don't have enough evidence, you have not performed enough audit procedures or you've not done a good work. So again, when they are giving you explanation, there are things that you could be checking and seeing for yourself. Those things that you can check and give you evidence, we call that process observation. Unajionea. That is an additional audit procedure. Sometimes when they are explaining this and you've inspected the records, you can have to recalculate or perform audit procedure that is called calculation, just to check on the accuracy on whether the figures that were being given were correct. And that is audit procedure called recalculation or reperformance. So it means that by analytics, you can be able to perform this. Audit procedure can start from anywhere. You can be doing inquiry, but then from inquiry, you realize that there's an explanation that is forcing you now to compare some years or variables so that you can do analytical procedures. Or you can be doing inquiry. Through inquiry, you are given some evidence that you have to inspect. Or maybe you started your procedure by doing inspection. You are inspecting the records. Through inspection, you got something that you're doubting and you need clarification. So from inspection, you could perform inquiry to get more explanation and a better understanding. These are audit procedures. Now, when we are performing audit procedures, what are we trying to do? We are trying to verify something that is called assertion. We are trying to confirm the claims, because when somebody calls you to come and audit him, he's assuming that the books are okay. Those books are accurate. So the auditor can come and confirm whether they're true. That kind of claim, the claim that the books are well posted, they are well corrected, they are accurately posted, that claim, we call it assertion. So you apply audit procedure on the subject matter, which is the financial statement, to confirm the claims. So let's look at some of the claims that we always confirm by applying the audit procedures. What are you looking for? Whenever you're doing audit, you don't just do audit. There must be intention. That intention is to satisfy a certain claim or to confirm a certain claim. And that claim, we call it assertion in audit. So let's look at audit assertions, the claims that managements are putting forward so that you can come and check whether they're true or not. Let's look at the assertions. So assertions, audit assertions, that we always check whether they are true. We apply the procedure to confirm the audit assertions. And we are saying that assertions are claim. They are claim that the management are putting on the financial statement so that we auditors, we come and confirm whether they're true. We call them ACCA cover. The first claim, when they are giving you financial statement, they are trying to claim that those financial statements are very accurate. So you come and perform recalculation to check whether accuracy is true. So the first one is accuracy of the record. The second one, they are trying to tell you that they have posted everything completely and nothing is pending. They haven't forgotten anything and everything has been included. Therefore, we check whether they are completely posted. So we have completeness. They are also telling you that they have only included expenditures where they're supposed to be. And the capital expenditures, like now the PPEs, the buildings, long-term expenditures have been posted correctly. Meaning that whenever they went for shopping, everything has been posted at the right place. That's when we call classification. They call it classification. So we have classification here. Then we have allocation. Then we have cutoff. Then we have occurrence. Then we have valuation. We have existence. We have rights and liability, rights and obligation. These are the claims that they are making. I wish Sarah will be back because These are very important. These are the beginning of audit process. Now, during execution, you are performing audit procedure to confirm the accuracy, to confirm the assertions. And I wish that everybody will be having a stable network so that we proceed together. Let me know when you have copied that so that we proceed. Sorry for that, we had network problem. We had network problem, but we are now back. So I'm hoping that you are able to understand that. Sarah, when you are away, we are saying that when you are executing, when you are doing actual audits on a client side, you are applying audit procedures to confirm the claims, and these claims we call them assertions. And the first assertion is accuracy. We have completeness, we have classification, we have allocation, we have cutoff, we have occurrence, we have valuation, we have existence, and then we have rights and obligation. Rights and obligation. So I have explained what we mean by accuracy. I've also explained what we mean by completeness when you are still around. Now, I want us now to look at what we mean by classification. And I'm saying that whenever you're doing transaction, you need to check that every item that you buy, you go and pose it at the right place. That is called classification. But then we also have allocation. Sometimes you can go to supermarket. When you go to supermarket, you go to any hardware and you buy some things for the office. One of the things that you could have bought are stationaries. Maybe from the bookshop, you can buy stationery, but at the same time, you could have bought something like paper punch. Now, paper punch is a loose tool. That is a fixed asset. But the books and the pens are always stationaries and expense, the normal expenses for the year. Now, the two are different, but you are going to be given one receipt that has both of them. So as a good accountant, you can't post the whole amount and expense it. You need to tick and remove the ones that relate to PPE, like loose tools, like padlocks. Padlocks are loose tools. We also have paper punch. We have stapler. Those are loose tools. You need to record them under loose tools. And that is called allocation. Allocate the figures on where they belong to. And then the ones that belong to the stationery, which is the normal expenses, you separate them so that you give the correct position. That is what we call allocation. When we come to cutoff, we are talking about mostly, we're talking about the period. For example, when you're doing exam, you'll be told that exams start from 2 to 5. So 5 p.m. is the cutoff. When you've done an assignment, you'll be told that the cutoff for collection is 5 p.m. and you submit. That is a cutoff. So cutoff basically refers to the end of something. Now, mostly, this one appears to apply in P&L items. The profit and loss items or income statement items, those are the items that are always considered when it comes to cutoff. Because you look at the balance sheet items like building, building does not have a cutoff. You cannot say that this building belongs to this year and not next year. It is something that is continuous. You only write it off. So that one is within a cutoff period. But when you're looking at the profit, you say profit for 2020, profit for 2021, but you can't say building for 2020, building for 2021. Building is always there forever, as long as it's still in use. But income, the profit, the expenditures, those are for specific period. Therefore, if there are expenditure for 2020, you need to spend it and end it in 2020, so that 2021 we start a clean page. We start new income and new expenditure. At the end of the year, we knock them off, get the profit, we transfer the profit to retained earnings. The following year, we start afresh. So therefore means that when I'm auditing, I need to check that the expenditures that you have included in your books are only expenditures for 2021. and nothing has anything to do with 2022 or 2020. So that means when you're auditing something like prepayments, you might find that the client has paid rent from October 2020 to June or September, end of September 2021. When I'm auditing this rent expense, I only take rents that relate to the 2020 period for the financial year 2020. Even if it has been paid in advance, I only pick the ones for the 3 months, October, November, and December. Why? Because December is the cutoff period. So it means that from January going forward, that is a different financial year, and the expenditure for 2022 cannot be included in 2021 or 2020. So make sure that you only have items that relate to that year. That is what we mean by cutoff. Iko na mwisho yake. Then we have occurrence. Occurrence basically means that I need to check that transaction did occur. You cannot come and tell me that there was a business that you did when actually you didn't do it. For example, the issues that we always have, for example, with the NYS situation. You remember the scandals that you have had in Kenya? Those transactions were not occurring. They didn't take place. As an auditor, I need to check whether it did occur. Did it actually take place? That is my role. So that's why we are looking at the occurrence. You need to test that they actually happened. Si ati mtu alikuwa anatembea hivi, amepatikana kwa gate na anaambiwa, you know, we can give you some money. Just go and write invoice and get us, we shall pay you. There was no occurrence. As a good auditor, you need to test whether there was occurrence. Confirm. And so, how do you confirm occurrence, for example? You want to see that there was actual submission of the items. Come money, medical items, medical equipments. You want to check that they were actually brought. It could have been used, but was it brought? How do you know that it was brought when the year has passed and they were already used? You need to check that there was an advertisement requiring them to bring the items. The approval process was done properly. You need to check that there was approval process, like the selection process, and the person was appointed, and there were minutes. You need to check that this person actually delivered, he brought the sample, and the sample was received. He actually delivered, and there was a delivery note that was signed by the right people. You need to check that there was an invoice that was brought indicating the descriptions of the items that were brought. You need to go to the bank and check that the money was actually paid to the right person that was appointed. You need to check that the people who are supposed to be serviced, if it was, for example, medical equipment, it was brought and delivered to some hospital, you can even proceed and check that those things were delivered to that hospital physically, so that you can be able to confirm that actually transaction did occur. Sio rumors, ilifanyika. Na audit ni kitu tamu sana. Ama mnaonaje? Abdi, what do you think? Is it not a good thing to do audit? Sarah, do you think you would want to be an auditor? Very interesting. Yes, you look at these things and then confirm. Now let's look at something like existence. Existence, if somebody is telling you that we have 30 vehicles, are you sure? Are you sure? As an auditor, you need to be skeptical. You always have doubting mind. Mpaka ujione. All right? So mtu akikwambia ati hii county government iko na motor vehicle kama number plani or whatever, you go and check physically. You look at the serial number of this motor vehicle. You want to check that they own this motor vehicle, and that is what we call rights and obligation. Do they have rights on those motor vehicle? Ama ni gari ya director, ama ni gari ya governor, wanasema ni ya county. Maybe the county bought motor vehicle, but the motor vehicle was registered under the name of director. As an auditor, you need to check the rights and obligation. The rights means that they own it, ownership, where you need to check the you need to look at the sale agreement, look at the title deed and the approval processes. Not the title deed, by the logbook, if it is motor vehicle. If it is a land, you check on the title deed. Which name does it indicate? That is the ownership. Rights and obligation. Obligation means that you take the liability. Any problem that comes with that motor vehicle belongs to you. So that if the motor vehicle belongs to me, that is a right. If it causes an accident, I'm obligated to take care of that. I have to be answerable. So all the liabilities are obligations. If it is, for example, loan, I have taken loan from the bank. You need to test the rights and obligation. Number one, that loan belongs to me, so I have the right. But I'm obligated to pay that loan back plus the interest. Therefore, you are testing rights and obligation. For loan, you need to check that there was loan approval process. Normal KYC processes were done. The appraisal process was done. The loan was finally sent to me, and I used it for the purpose it was made for, and I've started paying it. It is under my name, and the bank can confirm that. That is right and obligation. So these are the audit procedures. Now there is something called subject matter. Subject matter is the item that we are auditing. So the subject matter can take any form. It can be loan, it can be physical in nature, it can be system, it can be anything. It can be the procedures that you are auditing. But either way, you need to understand that in this subject matter, this is the assertion that can be applied in that subject matter. Apply the right procedure to confirm that assertion. Come on in motor vehicle. I know that motor vehicle, I can't apply cutoff. I can't apply cutoff, but I can check whether a transaction occurred. I bought it. I can check whether it exists. I can check the valuation. If somebody is telling you that this building is worth 4 million, how do you prove that? You look at the valuation report. Was there a valuation that was done? Kama history ya SGR, ESGR, tunaambiwa it may cost this much. That is the value. As an auditor, I need to test. How did they arrive at that value? Kwanza, did the transaction happen? Yes. Was the money fully paid towards SGR or people's pocket? It went to SGR. So if that is the value, then how did they come up with the value? I need to look at that. Who are the experts that came in to value it? What was the cost that were used to build it? The cost of the materials, the labor cost, and everything. If there was interest that was charged on the loan, I need to check that. That is valuation. If it is a building, what was the last valuation report? Who are the valuers? What was the qualification of the valuers? How did they arrive at the figure? And why did they decide to value it? Because huwezi niambia tu, ulikuwa umenyamaza hivi na nyumba yako, alafu unaamua, I'm going to value it. Kwani nini imekuja kwa akili yako? What has come to your mind to make you value that building? You must tell me why you decided to value it at that time. Were you intending to sell it? Yes, because the reason why you always remain skeptical, lazima ukue chonjo as an auditor, ni kwa sababu one information can lead you to another. You might realize that they are giving you valuation report, but then as an auditor, don't just take the report. Ask them first, why did you value it? You might realize that, oh, they weren't intending to sell it. Ndio mtu na anakuambia, oh, unajua tulikuwa tunataka kuuza hii building, lakini tukaona bei ni mbaya. Mbona mnataka kuuza? Wanakuambia, oh, unajua tulikuwa na shida ya pesa, most of our revenues went down. You go back. Kwa nini revenue ilienda chini? Oh, we had a bad manager, or they were stealing, or we had a bad product. So what happened? Did you steal? Or what happened to the bad managers? Audit is a procedure. Kitu kidogo inafanya unaenda kwa next step na unaenda kwa next step na through that process utagundua vitu mingi sana. So you don't just take it at your nimepewa valuation report, I'm okay with it. I've confirmed this is a value. No. Why did you value it? We valued it because we wanted to sell it. And was it approved or you wanted to sell it behind the door? Yes, it was approved and the board decided to sell it. Why did the board think that it was good for them to sell the building for the company? The board realized that we had a problem with money. We didn't have enough cash flow. Why did you not have enough cash flow? Because the one that we had was being stolen or it was being leaked by the management. So was there fraud that happened? Yes, fraud has happened for the last 3 years. Sasa hapo, at that stage, you now start auditing fraud. You now go to the bank statement, check how the fraud happened, who are involved, why did they steal, and what happened? Are they arrested? What is the status? Is there a case in court? That is an auditor. That is now an auditor. You don't just come and say, okay, nimetosheka. No, an auditor goes deep and deep and deep, paka mwisho. Now, we shall go into those. I know that now you understand what we mean by assertions and all that. Welcome, Chris. This one is intermediate audit. intermediate audit. Sasa, yes, audit and assurance. Assuming that you have collected enough evidence, of course, during the process when you're doing execution, they are giving you some documents which you can be able now to file. You are collecting evidence as you file, right? As you file. What you're going to use to perform these procedures is called audit program. We shall be able to look at audit program. It is a guideline that tells you when you get your bank statement, what are the audit procedures? How do you go about it? That is audit program. So we shall look at that. But assuming that you have collected evidence and you are satisfied with the result that you've gotten, whether it is bad or good, you need now to go to the next stage, which is a review of the report. So the next stage in audit is a review of the report. What do you mean? You go back to the office and start looking at the report that you have and the evidence that you have. Are they matching? Before even you write the report or give the report, unaangalia zile notes umeandika. Because when you're auditing, you are taking some notes, the findings. So look at the findings that you have and compare it with the evidence that you have. Is the evidence sufficient to support the finding? If it is not sufficient, you can perform additional audit procedures, even when you have left the client's premises, when you are back to the office. So you need to do review and reporting. Review and reporting. So these are the major audit procedures that you'll be able to perform in audit. And I will now want to go direct to the first topic, topic number 1. So any question that will come must fall under this. It is there under reporting. Look at topic number 12, number 14 is reporting. Look at other topics like risk assessment. They are in planning, risk assessment. That is topic number 4, 5, and 6 are here. When we look at topic number 7, audit documentation, internal control system, audit evidence, topic number 12, errors fraud. Those are things that are under execution. It is through execution that you'll be able to realize errors, fraud, and such like things. You'll be able to collect evidence, audit evidence, topic number 12. Topic number 7, documentation, internal control system, right? Then when we come to topic number 12, number 13, auditing in government institution, that is now the general audit procedures, but for government, that is public sector. And then we have reporting, topic number 14. Then number 15 is auditing around computerized environment. What happens is that an environment where there is a computer being used, how do you audit it? Are you going to log into the system, or you're going to wait for you to be given the output? Unangojea, unaitisha, wana print, unatumia, ama we pia utamanuva, utalog in na uangalie mwenyewe. That is auditing around computerized or auditing in a computerized environment. So you can see that this one is basically a summary of all the topics. Topic number 2, for example, assurance and non-assurance engagement. That is at acceptance. You need to know the report that I'm going to give. What is the nature of report? During planning and during acceptance, you need to know, is it a report that is going to assure them, or it is a report that you're just giving? You're not going to assure them. Let's now look at topic number 1, nature of audits. And of course, now we start by definition. Somebody has a problem with the network. That is Mohammed. So topic number 1, call it nature and objective of an audit. Nature of and objective or purpose of an audit. Use the word objective or purpose. Nature and objective or purpose of an audit. And then you start by defining what you mean by audit. And say, an audit is an official inspection of an organization's account. Audit refers to inspection of an organization's account. Audit refers to inspection of an organization's account by an independent body. It is an inspection of the accounts by an independent body. Or it is an independent examination of financial information. Or it is an independent examination of financial information. Or you can define it, also you can define it as an independent examination of financial information of an entity, by an independent body. The independent body is the auditor, so as to give a conclusion. So as to give a conclusion on whether the financial statement represents true and fair view, so as to come up with a conclusion or to give a conclusion on whether the financial statement provides free and fair view, financial position of the company. Fair view, financial position of the company. So what am I saying? The keywords here are, number one, when you're defining an audit, and here we are talking about statutory audit, the audit that is provided under law. We are saying that it's about examination or inspection of the books of accounts. Those books of accounts contain financial information. So when we talk about inspection of financial statements or financial information, they are the same as the books of accounts. And the main purpose of doing that is so as to come up with a conclusion, on whether the financial statement represents the correct position of the company. Meaning that we are trying to check and come up with a conclusion that whatever we are seeing is actually what is on the ground. Yani things on the ground are the same. Whatever is in the record and what we are finding on the ground after inspection are the same. That is what we are saying, that it is about inspection so as to come up with a conclusion on whether financial statement represent true and fair view, position of the company. True and fair view, position of the company. It is true that whatever you're seeing in the books are the correct position of the company. Somebody has a question here. Pardon the last part. I've pardoned. Umeipata sasa? Audit is about an independent examination of the financial information of a company or entity in order to come up with a conclusion. Of course, it is done by an independent auditor, right? So it is an inspection or examination of financial information of an entity by an independent person, that is an auditor, independent body or person, that is an auditor, so that he can be able to come up with a conclusion on whether the financial statement represents true and fair view. Now let's look at the history of audit. Initially, audit process started by the word odai. You can write it like this, odai. Odai basically means to listen or hear. It is a Latin word that means to listen or to hear. So it means that long time ago, audit process was being done by somebody that, in other words, they call it nyapara. Somebody who will just come and sit there, listen to your story. Like as in, when you do a mistake, you go and explain yourself to that person. Alikuwa kama mdozi, anakaa pale, ukifanya makosa unaenda unajielezea. Alafu ana make decision according to his opinion, is going to say hapo iko hivi, vile umesema ni hivi. That is somebody who was just listening. That is an audit historically. So companies will have somebody who is doing that. Kazi yake, employees wakifanya makosa wanaenda wanajielezea, alafu it makes conclusion. Now it reached a point where the volume of transaction in the companies increased. So instead of this person waiting for you to come and explain, he will go physically and see for himself. So he's now doing audit procedure that is called observation. Because the first for hearing was inquiry, where you get explanation from people, you ask them questions, then you make decision. So inquiry is an audit procedure that is still being applied. But on top of that, they started now to go physically and check and see for themselves. Therefore, they increased the audit procedure. But now, with the technology that came in, people decided now to go more than that. They have started applying audit procedures to now thoroughly inspect the books. So people knows auditors as those who inspect the books to look for mistakes. But I can tell you that with the time, that changed. Today's auditors are more of advisory. They are part and parcel of the company. They help the company to improve. So we are doing what is called advisory services. Unaangalia, ukiona makosa naambia hapa inafaa ikuwe hivi na hii inakuwa hivi. So people are much friendly. So today, when auditors come to your company, please don't run away. They are not your enemies. Those people are your friends. They are there to help you. They are there to help you. Most people run away from auditors. Auditors of today are more of advisory. We are doing what is called risk-based audit. Risk-based audit meaning that we are checking areas of high risk and then we give a recommendation as expected. So that is the nature of audit. Initially, the audit was about checking, but today's audit is about advisory. Let's look at the objectives of an audit. Objectives of an audit. The first objective of an audit or purpose of an audit, the reason why we do audit, number one, is to provide credible information or report in relation to the financial statement. We do audit so that we can give information or report that is credible in relation to the financial statement. That is a question that was set in 2022 December. They were asking questions like that. What are the objectives or purpose of audit? Number one is to provide credible information. Provide credible information or report in relation to the financial statement. Number two, we do audit. So the first, I want you to understand it from this point. Functions of audit are in two ways. Or objectives of audit or purpose of audit are in two ways. Audit is actual examination. The reason why we do it can help me as an auditor. It can also help the management. The management has got advantage for being audited. But giving me a chance to audit also gives me some advantage as an auditor. So when we talk about the objective, the purpose, the importance, they are more or less the same. We need to look at who is benefiting, and both of them are okay. When we talk about providing information that is credible, that is important to the users. The users will get credible information that they can make decision on whether to invest or not. It also helps me on the same way as an auditor so that I can give accurate information. Giving me an opportunity to come and check for myself makes me able to give the correct information, which is the credible information. So therefore, we look at the second function or purpose of an audit. You say that audit helps or enables the auditor. Through audit, it enables the auditor to express an opinion on whether the financial statements are prepared It enables the auditor to express an opinion. Hizi zenye nakwambia sasa hizi ni examination things. These are exam questions. To enable the auditor express an opinion. To enable the auditor express an opinion. To enable the auditor express an opinion on whether the financial statements are prepared. To express an opinion on whether the financial statements are prepared on whether the financial statements are prepared in all material respects, in accordance with the applicable financial reporting framework. In all material respects, in accordance with the applicable financial reporting framework. In accordance with the applicable financial reporting framework. Now, I want to understand something. The word financial reporting framework will be used. We shall be using the word financial reporting framework as we proceed. Framework is a guideline. Now, financial framework are standards or guidelines that are provided. For example, we have IAS standards. You know about them? IAS 1, about reporting and presentation. So it means that if I'm auditing you, I want to check whether you are applying IAS 1. You are doing reporting as expected and presenting your books as expected or as provided by IAS 1. When you talk about IAS 12, for example, IAS 12, we are talking about taxation. This one is about taxation. I want to check that you are doing taxation as provided. You are treating taxation as provided by the standard. These are the framework. So as an auditor, my guideline is the standard. I want to check that what you're doing is as per the standard. When you talk about, for example, IFRS 9, that is a standard that helps us or guide us in terms of the provisions of financial instruments. Yani IFRS 9 inasema, immediately you give somebody money, forget about it. Pesa ikitoka tu kwa mfuko yako, iende kwa mwingine, forget about it. That is IFRS 9. So it means that there are companies that give loans or they offer financial instrument. Those loans, whenever they are given, you need to start assuming that they are lost. Mpaka ile siku utaona imerudi. How many of you have ever given money to their friends and the money never come back? Can you keep reporting that money in your books as something that you're going to receive? You need to start thinking like it is getting lost. Forget about it until you see it. As an accountant, we are not optimistic. Accountants are very pessimistic. Sasa, we are always doubting things. Nikupea kitu kwanza na najiuliza utarudisha kweli? Because I can give you now, alafu next time nimesikia umegongwa na gari na uko na pesa yangu 1 million, nitapata hiyo pesa wapi? Nisikie umegojeka, nitapata hiyo pesa wapi? Can I come to your bed and start requesting for my money? Nisikie kazi imeharibika. I gave you money with a good heart. You told me that you're going to pay after 2 months. Utakuwa umemaliza 100,000. Alafu the next thing nasikia kazi imeisha na umeshikwa. Nitapata hiyo pesa wapi? Now that's why standards come in. IFRS 9 says that whenever you give somebody something that is called financial instrument, money, forget about it. Afadhali gari. Gari at least nitaona, ukishikwa ama kazi imeisha, gari yangu bado iko. Nyumba bado iko. But pesa imeingia kwa mfuko, I will not get it. So we need to start treating it. Now when I'm auditing you, I will check, depending on the nature of business, I will check whether you are treating it correctly. That is what we call financial reporting framework. You are using the right standards to report on your financials. So that point was trying to say that it will help me to express an opinion on whether the financial statements are prepared in all material respects, in accordance with the applicable financial reporting framework. Applicable kwa sababu in some questions I cannot apply IFRS 9. In some situations I can apply it. So it is in accordance to the standard that should be applied in relation to or according to the business that you're doing. The next one, which is number 3, it also helped me to express my opinion, on whether the financial statements are free and fair from errors. To express an opinion on whether the financial statements have been prepared in a free and fair way. To express an opinion on whether financial statements have been prepared in a free and fair way, or basically, the financial statements are free from material misstatement. to express an opinion on whether the financial statements are free from material misstatement. You can say like that. To express an opinion on whether financial statements are free from material misstatement. The financial statements are free from material misstatement. Hazina errors, imetengenezwa vizuri bila makosa. Bila makosa. Hakuna kitu umesahau ama umeongeza. All right? Thank you. The next one. It also helped me. It enables the auditor to report on whether the financial statement give true and fair view position of the company. It enables the auditor to report on whether the financial statement gives true and fair view financial position of the company. It enables the auditor to report on whether the financial statement provides free and fair view, true and fair view, whether financial statement gives a true and fair view position of the company. True and fair view position of the company. The next one, it also helps to express an opinion. To express an opinion, opinions that we shall be able to look at. To give my opinion, opinion is whether it is qualified, unqualified, adverse, and such like things. To express an opinion on the financial statement. Audit helps me to express an opinion on the financial statement as a whole. E.g., it helps auditors to express an opinion on the financial statement as a whole. E.g., qualified, unqualified, e.g., qualified, unqualified, adverse, or disclaimer. E.g., qualified, unqualified, adverse, or disclaimer. Those are the kind of opinions that I can be able to express. It also helped me to gather enough evidence that can allow me express an opinion. So you can say, audit also helps the auditors to gather enough evidence so as to express a conclusion or opinion. There we are focusing on evidence. You cannot get evidence if you have not done an audit. You need to audit so that you collect evidence. So through audit, we can be able to collect evidence. So it helps to come up with enough evidence that can help in expressing an opinion. It also helps to prevent fraud. Wakati tunafanya audit, we can be able to detect and prevent fraud. That is the next objective of audit. Why people call for auditors? So that we can be able to know where frauds are happening. And we detect or prevent. We detect or prevent fraud. The next one, to detect and prevent errors. 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 The next one, to confirm the level of compliance with the regulatory requirements. To confirm the level of compliance with various regulatory requirements. To confirm compliance with the various regulatory requirements. To confirm compliance with 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 the various regulatory requirements. I hope that you've done the stages of an audit, but we can just go through them as a summary. Let's look at stages of audit. The first stage, we talked about it, acceptance of engagement. Is under preliminary stages. So we talk about the first stage, acceptance of engagement. This is under preliminary stage. So, what are some of the things that you look at under preliminary stage? Or let me just have it clearly. Let me start by writing preliminary stage here. The first step is preliminary stage. So here we have the first one, acceptance and continuous procedures. And I hope that now you know what you need to do when you're accepting. When you're accepting the client, look at this. Before you start planning, you need to know that you're accepting the client or continue. Continuous procedure, these are procedures that you perform on an existing client. You are wondering whether to continue with engagement or reject. Acceptance is for a new client. Acceptance is for a new client. Are we together? So when you talk about the client acceptance or continuous, you need to ask yourself, I've been appointed. What are some of the things that makes me continue with this? So under acceptance stage, the things that you're looking at, or even whether to continue, you look at your understanding of the engagement. This one I've taught you here. We have discussed this. Why do you want to understand the engagement? Or even in continuous, why do you understand the engagement? You might realize that you have audited the client in the first year. In the second year, the client has changed their nature of operation. You need to still understand what they're doing. Inaweza kuwa the first year they were operating in a normal hotel business. In the second procedure, in the second year, they have now changed from hotel business. They are now doing what is called Airbnb, or they are now in restaurant and accommodation. So the nature of business has changed. The risk level might also change. During acceptance, you need to understand the integrity of the client. Kuna clients wengine wakora sana. So we are saying that at the beginning, before you accept, you need to understand that this client sio mjanja. Kuna wale wakora, kianza kufanya kazi umerealize that the books are being cooked. Anafanya biashara yenye sio hii, akona hoteli ama anauza manguo, lakini biashara yake kamili ni ile ya kuuza madrugs. Anauza dawa. So you need to know that the client that you're dealing with is a client that you understand and has got high integrity. You might even find yourself in trouble that this client is running business, but is causing fraud, is stealing money from the government, na anapump kwa biashara. So the name of the business and the business that is doing is only to cover, but not the actual thing that is doing. You also need to understand the client's competency. You need to understand that the client and its management, how competent are they? Do they know what they're doing? Are they doing the right thing? Do they have the right accountant? So that as you accept the client, don't get yourself into trouble. Don't find yourself taking a lot of risk. You know, as an auditor, if you give a wrong conclusion, you can be sued. So if you accept the client who doesn't know how to keep the books, ama anaficha vitu, at the end of the day, they are not competent. You will realize that you are going to give a wrong conclusion. So those are things that you need to do, which we call preliminary procedures, right? Now, the next activity here under preliminary activities, you can say, you need to also understand that the terms of engagement have been agreed in writing. Terms of engagement are agreed in writing. And this one I talked about, the LOE. Remember, letter of engagement. The terms of engagement are agreed in writing, and that is the letter of engagement, LOE, letter of engagement. we have signed. You need also to think about the quality control procedures on your side, the quality control aspect for the assignment. You need to look at the procedures of appointment. So before you accept the appointment, you need to ask yourself, was I appointed legally? Did they follow the right procedure when they were appointing me? So you need to understand the procedure of appointment of the auditor. As an auditor, you need to check that you are appointed using the correct channel. Si ati mtu amekuleta tu kwa mfuko, chukua hii kazi. People don't even know you. How do you accept such an engagement and you want to go and do audit? That will be very tricky. Let's look at planning stage. So preliminary means vitu za kwanza zenye nafaa uangalie. The very first items that you need to look at. Let's look at the planning stage. Under planning, identify the scope of the client. Scope of engagement. Develop an audit strategy. To come up with a strategy on how you're going to do the audit. Develop an audit strategy. Ascertain the nature and the extent of resources that you have. Ascertain the nature and extent of the resources available for you as an auditor. Ascertain the staff capacity and competency. Check on whether there is need for experts. Maybe whatever you're going to do, you might need an expert. Check whether there was need for any expert. Check whether there is need for an expert. Also check on timing and the nature of expected reports. Timing and nature of expected report. Perform risk assessment. Perform risk assessment. Perform risk assessment. Let's now go to execution, which is the next stage. Are we okay up there? Ama kuna mahali unataka nirudie? I don't want to leave anybody behind. Is there anything that you don't see? Okay. So if that is okay, then we can proceed on execution. That is number 3. I told you execution and evidence collection. Execution and evidence collection. Here we are saying that you carry out audit test, carry out the test of control and certainty test. Test of control and substantive test. In audit, remember I told you about audit procedures. That you need to use here. Those audit procedures are tests. Part of them are tests of control, part of them are substantive tests. Now, I need you to understand the differences between the two. Test of control is an audit procedure that is applied to test on the control system, whether the company has got controls or not. Any test out of the audit procedures that we mentioned, if you are doing it and the intention is to test the control, then that is test of control. We call it control test or test of control. It is normally a test that is done or an audit procedure that is applied to test on the control system, whether they are weak or not. First, you test whether they are controls or not, and whether the existing controls are weak or strong. Any other procedure, any other audit procedure that you're applying that is not intended to test control is actually testing substantive test. It is a substantive test. Any other audit procedure that is not testing controls are substantive test. We only have 2 tests, either substantive test or test of control. Test of control tests the internal control system. Number 1, it tests whether it is strong or not. Number 2, whether the existing controls first it tests whether there is existing control or not. Number 2, it tests whether those controls that are existing are strong or weak. Any other audit procedure that is not testing control is a substantive test. Those are procedures that you apply. So we are telling you, as you execute the assignment, can you perform test of control and also substantive test? We are telling you, apply audit procedures to execute. Number 2, evaluate the significant assumptions used in fair value measurements. Evaluate significant assumptions used in fair value measurements. Evaluate significant assumptions. Evaluate significant assumptions used in fair value measurements. Evaluate significant assumptions used in fair value measurements. Evaluate significant assumptions used in fair value measurements. Significant assumptions used in fair value measurements. Evaluate significant assumptions used in fair value measurements. To determine the reasonableness, to determine whether it is reasonable, to determine the reasonableness of basis used and the disclosure. To determine how reasonable they are, the basis used and their disclosure. To determine the reasonableness, the basis used and the disclosure. Identify if there is any related party transactions and obtain sufficient evidence and obtain sufficient evidence in respect of disclosure. What are we saying? Related party are parties that are having something in common. Normally, when people are related, they do business without having proper written agreement. They have a lot of items or information hidden. As an auditor, when you are performing audit, you need to check, apart from doing the audit procedures, you need to check whether there was any assumption that were used in terms of valuation, in terms of depreciation. Those assumptions you need to check. That is point number 2. Number 3, also ask yourself, is there any related party transaction that has happened? Why? Because in those related party transactions, there are normally informations that are hidden, and that can make you come up with your own conclusion. So we are saying identify if there is any related party transactions and collect enough evidence to check whether there was a proper disclosure. The next part, document the audit procedures performed and the evidence collected. And that is why we call it evidence collection. Put down the evidence that you have collected and also the audit procedure that you have followed. Document the audit procedures followed and evidence collected. That is under execution. We are now in number 4, which is a review and completion or reporting. Under review and completion, you need to check if there is any outstanding matter that you need clarification on. So you say, check if there is any outstanding matters that needs clarification. Perform consultation, that is the next one. Check on any outstanding matters. That needs clarification. Perform consultation with the management. Consultation on difficult areas. For better understanding of the difficult areas. Consultation for better understanding of difficult areas. Consult so that you can understand difficult areas better. Consult so that you can better understand difficult areas. Check whether you have collected enough and appropriate evidence. Confirm that you have collected enough and sufficient evidence that can support your report or finding. Check whether you have enough and sufficient evidence. Review your work. Review the work carried out. Review your own work. Review the audit procedures. Carried out. So the second last is confirm that you have enough and sufficient evidence out of the work that you've done. Also review the audit procedures that you've carried out. Review the audit procedures that you've carried out. Review audit procedures that you've carried out. I want to look at reporting. Reporting, I think that one you know. Reporting just about giving the report. So the last one is reporting. Reporting, issue reports at the right time to the right person. Let me stop there. Let me stop there. Allow me to stop there. We shall pick from there in our next class. Unless somebody has any question. So in case somebody has not paid, please call us so that we can proceed together. Right now we have an offer, 4,000 per unit, that is ending on 10. The offer starts today on 10. Our fee is 4,000 per unit. Offer rate. Normal fee is 4,500 per unit. 4,500 per unit. It starts today, not jana or juicy. It starts today. Our number is 0720 525 000. 0720 525 000. So kindly get in touch. Kindly get in touch, make payment so that we can proceed. You support us, we support you, we move together. Thank you so much. So Vincent is saying, thanks so much. The flow is quite well. I trust the process. Thank you so much. Jonas, welcome. I hope to find you in our next class in the paid groups because we shall be sharing some notes there. So, sir, thank you so much.